on the FET chart. Today, we're diving into what's happening with Fetch.ai. It looks like it's finally gaining some upside momentum, and I've got all the latest insights for you. Let's jump right in. In the past few days, we discussed the potential formation of a bottom in Wave 2. The good news is Fetch.ai has managed to hold within our key support zone. But here's the thing. There's not much room left in that area. If sentiment remains strong, FET could start turning around here, and we could see the bulls taking charge. Current market movement. Today, Fetch.ai is already showing signs of life, with an 8% gain so far. The price was down to around 119 cents, and now we've seen it climb to approximately 136. I even updated our members earlier today, pointing out that FET is reacting positively to the support level. While it still appears weaker compared to other cryptocurrencies, it's showing some promising signs of recovery. Right now, this move looks a bit like a potential five-wave structure to the upside. However, it's not yet fully impulsive, so we can't confirm that the bottom is in just yet. But the pattern hints at a possible lighting diagonal, though I'm not labeling it officially until we see more confirmation. Key levels to watch. As I've mentioned before, as long as we stay above the 118 support, there's a chance we could see a third wave to the upside. Now, you might be wondering, where could that third wave take us? Ideally, it would target the 38% Fibonacci extension level at $1.96 or higher. That's a solid risk to reward ratio, potentially offering a 43% upside if the pattern follows through. Remember, your risk to reward ratio always depends on where you set your stop loss. If it's just below the invalidation point, it's not as favorable. But for those who entered around the middle of our support zone, this trade could offer a 6-to-1 or even 7-to-1 ratio, especially if you scaled in with larger positions near the bottom. Next steps and potential breakout. Right now, as we're talking, Fetch.ai is showing signs of stretching higher. But before we get too excited, I'd like to see a breakout above the $1.36 and $1.37 range. That would serve as an initial confirmation that we've found the bottom. The real game changer, though, would be a breakout above the previous swing high at $1.65. If that happens, we could be on our way to hitting our first wave 3 target at $1.96. Of course, there will be resistance levels along the way, so keep an eye on that. This isn't a done deal yet, but it's definitely starting to look interesting. Wrapping up. Even if we see a slight dip, as long as the support zone holds, we're still in the game. The invalidation point is at $1.10, a level we can't afford to break below, as that would invalidate our potential Wave 1 structure. If you found this update helpful, please hit that like button, leave a comment, and subscribe to stay updated on all things crypto.